There is a homeowners insurance crisis going on in America right now that has the potential to devastate local housing markets. In particular, right now in California, we are seeing homeowners denied insurance left and right, and there's now thousands of people who lost their homes in the recent fires with no insurance coverage. With a massive crisis now unfolding, everyone, there's certain parts of America where it's becoming impossible to get homeowners insurance at a reasonable rate, and one has to wonder what's going to happen to these cities and areas over the next 5 to 10 years. Are they even viable housing markets in the long run that people are going to want to move to and buy homes? And you can see that there's a very regional impact to this insurance crisis, with this map showing the cities in America where homeowners have to pay the highest amounts for homeowners insurance per $1,000 of coverage. It's these areas in blue, these bigger circles, where the insurance crisis is worse. Because the really unfortunate thing we're seeing for all Americans, not just those in Florida and California, is the fact that insurance costs are spiking. You can see this data from the Bureau of Labor Statistics shows that homeowners insurance premiums are up double digits year over year. They've been up 9 to 10% for the last year and a half, with the average homeowner's insurance cost in America now at $2,200 per year. And quite literally, we're seeing many Americans now forced to either sell their homes due to these increases in homeowners insurance or simply go with no homeowners insurance. Over 10 million American homeowners right now are going without insurance. This is something called going bare, and they're just taking the risk that if something happens to their property, they'll have to pay for it, or that it'll be a total loss. So you can see in Florida, it's a big problem right now. In Florida, people in Miami have to pay $17 per 1,000 in coverage, meaning that if you wanted to insure a $400,000 structure in Miami, that would cost $7,000 a year. Meanwhile, New Orleans also has really high insurance costs at $17 per 1,000. Additionally, Oklahoma has high insurance costs. Texas has surprisingly high insurance costs. And this is starting to have an impact on home prices, everyone, because while home values in America are still going up on a national basis, they are starting to go down in certain states. You can see, for instance, that there's 3 states in America right now where prices are dropping year over year: Florida, Louisiana, and Texas. And not so coincidentally, those are the 3 states where insurance costs are highest. So I think we're already seeing this insurance crisis start to play out on the US housing market. And an important thing to remember for you as a home buyer is that insurance costs are not something you lock in at closing. A lot of people think that when they buy a house and get their mortgage, that their payment when they close is going to be their payment forever. But really, the only thing you fix is your interest payments and principal payments when you close with a fixed rate mortgage. Meanwhile, your insurance costs and your property tax costs, as well as your maintenance costs, those are variable and they can go up by a lot, and they have gone up by a lot. This data from the ICE Mortgage Monitor shows that since 2019, property insurance costs have gone up 52% across America, even higher than the indications from the Bureau of Labor Statistics data I showed you earlier. Meanwhile, taxes are up 20%, interest is up 15%, principal is up 17%. And this is for all mortgage holders, mind you, everyone. Since this is all mortgage holders in America, you can see how much some of these costs are going up. In particular, change in property insurance since 2019 is highest in Deltona, Jacksonville, and Cape Coral, Florida, where insurance rates are up 80 to 90%. They're also up 80% in Orlando. Interestingly, they're up 80% in Ogden and Salt Lake City and Provo, Utah. They're up in Tampa. They're up in Idaho. They're up in Denver and Colorado Springs. They're up in Phoenix. And really, it's the areas that have the biggest risk for flooding, hurricanes, and fire. Those are the 3 climate risks that are driving and influencing where these insurance costs are going up. Now, interestingly, for some Americans, this insurance crisis is a non-story. Some Americans live in parts of the country where insurance costs are cheap, where there's not much climate risk, and where insurers aren't really increasing their rates that much. For instance, if we go back to this map, we can see that in Seattle, property insurance only costs $3 per 1,000 of coverage. That is literally 70 to 80% cheaper than Florida. In addition, in New York, insurance is only $4 per $1,000 of coverage. In Chicago, it's only $4.50. Really, the Northeast, the Central Midwest, and the Pac Northwest is where insurance is cheapest in America. But what's actually really interesting here is California, everyone, because we led this video talking about California. They're having big fires there right now. A lot of people are losing their homes, unfortunately. Yet, in LA, your annual property insurance cost per $1,000 of coverage is only $3.50. So how does that make sense? How is homeowners insurance in Southern California, in California more broadly, so cheap, even though it faces such high risk from wildfires and we see insurance carriers left and right dropping out of the state? Well, that has to do, everyone, with government regulation in California. The California state government has very onerous rules about what insurance companies can charge. In particular, insurance companies in California are not allowed to charge for the cost of reinsurance. And what reinsurance is when insurance companies get insurance on their insurance. So if there's a high risk of big total losses, insurance companies will also try to get insurance in case the losses are big, and that causes the cost to go up. And almost every other state allows the insurance companies to pass that cost off to consumers, except California. And I think this is an important point for you all to understand how California ended up in this crisis where so many homeowners had their insurance dropped right before the wildfire happened. With California's insurance framework struggling to adequately address the needs for wildfires in Los Angeles, creating potential coverage gaps while leaving reinsurance companies largely unaffected. Governor Gavin Newsom said the fires, which have damaged or destroyed 12,000 buildings, could become the most expensive disaster in U.S. history, with preliminary estimates suggesting insured losses may surpass $20 billion. With reinsurers raising their rates and increasing attachment points, which prompted primary insurers like State Farm to reduce their own wildfire coverage in California because they weren't allowed to pass off those increases in rates to consumers. This dynamic has left many homeowners without private insurance options, pushing them towards the state insurer of last resort, the California Fair Plan. Primary insurers have argued that California's regulatory environment limits their ability to raise premiums to keep pace with increasing losses, with California's insurance market being another victim of the war on prices. Designed to keep insurance premiums affordable through rates that are never excessive, inadequate, or discriminatory, these regulations, introduced through Prop 103, led to rules preventing companies from recalibrating prices to fully reflect what they believed were higher future wildfire risks. In fact, between 2017 and 2022, California was the worst state in the country for homeowners insurance rate suppression, having the biggest gap between the actuarial indicated rate and the rate approved by regulators. And so when all the quants and actuaries look at California's homeowner insurance market, they think that the premiums should be way higher, but the state government doesn't allow those premiums to be charged, and thus insurers leave the state, leaving local homeowners without options, having to rely on the insurer of last resort. And I think one big misnomer, in my opinion, is that people will just blame the insurance companies for everything here. That's what the politicians in California are trying to do. That's what a lot of the mainstream news narrative is trying to do. But this is basically market economics, folks. If something costs a certain amount of money to a company providing a service, and you don't allow them to charge what they need to charge to cover that service, they're going to leave. They're going to leave, and they're going to leave people out to dry. And one thing I'm left wondering is if we're on the precipice of a fundamental breakdown in homeowners insurance. Because in certain parts of America, like California and Florida, we are seeing the losses get really severe. The insurance companies are having to bear. And in many cases, insurance companies are just leaving and not offering coverage. And the question is, who is going to offer coverage in the end? Is the concept of homeowners insurance in some parts of America faulty to begin with? And should, the US government be on the hook for subsidizing the people who live and elect to buy homes in parts of America that are disaster prone? I mean, that's what we just did in the recent spending bill by the US government. There was $100 billion for hurricane relief in Florida and North Carolina. Now, granted, a lot of that was deserved. Florida and North Carolina got hit really hard. They need federal assistance. But how often is the US government just going to step in and foot the bill for something that the private market is now no longer covering? And what I'm getting to, everyone, is that if you're someone who elects to buy a house in Florida in a hurricane prone area, or in California in a wildfire prone area, there is a chance that there won't be insurance for you in the future, or that insurance is going to be so costly that it's not worth it. And increasingly, I think Americans are going to make decisions on where to move and buy homes where there's the most security with their insurance costs, and where they don't feel like the biggest investment in their life, their house, is something that's at risk of a total loss. And again, to understand where the biggest risk is, everyone, for you as a home home buyer in terms of your insurance, let's look at this map from ICE Mortgage Monitor, and we're looking at property insurance as a share of the average monthly payment. So before we looked at the nominal insurance costs, now we're looking at how much the insurance is the total monthly payment. And in New Orleans, a quarter of your payment is going to insurance. In Miami, 19% of your payment is going to insurance. In Oklahoma, 18% of your payment is going to insurance. So these areas in blue, these bigger circles in blue, have more risk in terms of paying higher costs for insurance and ultimately natural disasters that could impact your property, because that's ultimately where these prices come from. These insurance companies hire actuaries. Meanwhile, if you go to many areas in the Midwest and Northeast, homeowners insurance isn't as big of an issue. It's anywhere from 6 to 8% of the cost. But that doesn't mean that the Northeast is completely insulated. Because interestingly, I got an email from an insurance broker in Long Island a couple months ago, and he was telling me that even in Long Island now, he's seeing insurance policies get dropped. He says, "Hi Nick, 36-year New York insurance broker here. I've never seen a homeowner's insurance market like this. We only have 2 carriers still taking new customers on Long Island. One is not licensed in New York State. Pricing is outrageous and underwriting is unreasonable. I think the Florida homeowner insurance market is actually better than here in Long Island. You have more carriers there in Florida. You should consider asking a boots on the ground insurance broker to team up with you for at least one video to let consumers countrywide know how bad this really is before they sign a contract to buy a house." And he's saying that a 12,000 square foot house not near the water is being insured for $600,000 replacement costs at a premium of $3,800. This is around $6.30 per $1,000 of insurable value, still much cheaper than Florida. But I'm starting to think, like, how is this going to impact just the functioning of the housing market in buying homes? Because insurance is required under vast majority of mortgages, particularly mortgages backed by the US government. You need to have homeowners insurance as part of closing. So if people are now struggling to get homeowners insurance in some parts of America, are being shocked and awed by how much their insurance payments are going up, is this going to cause a reduction in home sale transactions? According to Redfin, everyone, in Los Angeles, insurers aren't writing policies for LA area homes. Lack of insurance is a huge obstacle to buying a home right now. At the moment, no insurer other than the state-run California Fair Plan is writing policies. I met an insurance broker who said that until about a month after the fires are completely contained, none of the big players will provide insurance for homes within a 20-mile radius of the fires. And so if we look at data on ReventureApp on home price growth, we could actually see that home values were already going down in these areas in the Pacific Palisades where the fires were occurring. This is where like $3.5 million homes are. But if we're talking about a 20-mile radius around this area, that's covering a vast swath of LA County where home buyers just simply cannot get private insurance right now. And I think this is ultimately a story that we need to watch further in 2025. I don't think this story is over on the homeowners insurance crisis. I think it's likely in 2025 we see homeowners insurance costs go up even further, especially in California now where they're finally starting to wake up and start to deregulate the market a little bit. California is going to finally allow these private insurers to start charging for reinsurance. So the premiums in California's insurance market are going to go up for a lot of homeowners. And additionally, Florida is a market that's still taking it on the chin from the 2 hurricanes. I'm seeing homeowners insurance costs in Florida as much as $10,000 for certain houses. So be very careful if you're a home buyer. Make sure you have clear insight. Talk to multiple insurance brokers before you buy a house so you know what your insurance is, how much it costs, and what it covers, as well as the environmental risks and present and where you buy. If you want insight into helping you find the right area to buy a house, head to www.reventure.app. This is a program I developed that offers you as a home buyer data on home price trends, market trends, as well as home price forecasts in every state in America to arm you with the data to better understand where values are heading and if it's a good time to buy.